Welcome to Talk Tickers. We cut through the noise of earnings calls to get you the insights that matter fast. Today, we're diving into the latest numbers from a key player, looking at what's really driving their performance and where they might be headed.
Yeah, and this was, well, quite the quarter for them, a record setter, actually. We saw revenue hit new highs, profitability looked good, and some interesting strategic moves, too. Definitely worth digging into.
Absolutely. So let's start at the top. They brought in 311 million euros in revenue. That's a 17% jump from last year. I mean, think about that. Nearly a fifth more revenue added in just 12 months. That's pretty solid.
And it wasn't just revenue. Their core profit, that adjusted EBITDA figure, that surged by 25%. So not just bigger, but more profitable too.
Right. And it sounds like this wasn't just, one-hit wonder product or region driving it all.
Exactly. The commentary suggests it was pretty broad-based, strength across the product portfolio, across different geographies. That's usually a sign of a really solid foundation.
Okay, digging into the regions a bit. The U.S. market seems to be, well, on fire for them.
Revenue there shot up 31%. 31%.
Wow.
And the U.S. now makes up, 28% of their total revenue? Over a quarter.
That's a huge shift. Clearly, whatever they're doing in the States is working.
Yeah, you really can't overstate how important that U.S. growth is. It shows they can tap into these major growth markets, especially with their data for the big U.S. leagues, NBA, NHL, MLB. That feels like a key driver going forward.
And you mentioned profitability earlier. Their margins are improving too.
Yes. Adjusted EBITDA margins expanded to 19%. So basically for every euro of revenue, they're keeping a bit more as profit. Efficiency is improving.
That's that operating leverage kicking in, right? Revenue grows and profit grows even faster.
Precisely. Is what investors love to see. Shows the business model is scaling well, getting more efficient. It's a good sign.
Okay, but there was a little bit of complexity around the guidance, wasn't there? Their internal forecasts are apparently up, but the official guidance stayed the same. What's going on there?
Right. That's down to currency fluctuations. FX headwinds, basically. The stronger dollar against the euro is expected to knock about 10 million euros off reported revenue and maybe 3 to 4 million off EBITDA.
Okay.
So even though the underlying business is actually performing better than they initially thought, these currency moves are kind of masking it in the reported numbers.
It's like running uphill into the wind. You're putting in more effort, but the speedometer doesn't quite show it.
Exactly. A good analogy.
So despite that, they're sticking with the full year guidance.
Yep. At least 1.273 billion euros in revenue. That's still minimum 15% growth and at least 281 million euros in adjusted EBITDA, which is at least 26% growth. Still pretty impressive numbers, even with the FX factored in.
Definitely. And they're looking beyond this year, too. More profit improvement expected.
Yeah, they're guiding for at least another 2 percentage points of adjusted EBITDA margin expansion in 2025. Plus, they expect their free cash flow conversion, how much cash they generate from profit, to be even better than last year's 53%.
So growing, getting more profitable, and turning more of that profit into actual cash sounds like a strong trajectory.
That's the picture they're painting, yes. A business becoming a bit of a cash-generating machine.
Okay, let's dive into the why. What's actually fueling this growth? They mentioned the overall sports betting market expanding.
That's a big piece of it. The global market's expected to grow, around 11% CAGR through 2027? It's a nice tailwind to have.
And they're positioned right in the middle of that.
Exactly. They're seeing good growth in mature markets like Europe, but even faster, as we said, in the U.S. They cover, I think, about 70% of the betting gross gaming revenue for the big four U.S. leagues, NBA, NHL, MLB. That's significant coverage.
And they're not just sticking to the big markets. They mentioned Brazil.
Yeah, planting seeds there. Already got 50 clients signed up for managed trading services and iGaming marketing solutions. Shows they're actively looking for new growth areas.
Brazil feels like a market with huge potential. Getting in early seems smart.
Absolutely. And their success there suggests their model can adapt. They're also keeping an eye on Asia-Pacific, Japan, India, and even longer-term stuff like Thailand, Sri Lanka, looking ahead.
Okay, another key strategy seemed to be this take rate expansion, getting more out of existing customers.
Right, basically upselling, moving clients further up the value chain, getting them to use more products, especially around things like in-play betting.
And they said only about 40% of clients currently take 4 or more products.
Yeah, which suggests there's a lot of runway there. Significant potential to sell more into their existing base.
And their product portfolio seems pretty broad to support that.
It really is. They've got leading positions in huge sports, soccer, basketball, tennis, backed by key rights deals with leads like the Bundesliga, UEFA, AFC, NBA, WNBA, ATP, UTR, and soon the IMG Arena stuff too.
Their soccer coverage sounds immense. Over 150,000 matches a year.
And up to like 190 pre-match betting markets, 250 in-play markets per game. Yeah. It's incredibly deep.
And they're pushing new premium products there too. Foresight streaming, alpha odds.
Exactly. Those are aimed at enhancing that betting experience, particularly for in-play, using more data, better analytics to create more engaging opportunities, and things like their virtualized live match tracker are already getting good traction. 50 million viewing sessions in Q1 alone shows the demand is there.
They're doing similar things in other sports too, expanding betting options.
Yeah, NBA, for example, they rolled out something like 1,800 new betting opportunities per game, mostly player props and micro markets, and they plan similar things for MLB.
It's about catering to that demand for more granular betting, right?
Precisely. And those next-gen products are key. Foresight streaming, embedding NBA League Pass, getting like a 3.5% click-through to sportsbooks. That shows it works. And they're already planning a version 2.0 for Foresight in late 2025, adding more dynamic stuff for tennis shot quality, momentum analysis, that kind of thing. Constant innovation.
Okay, shifting slightly, they're also pushing into adjacent markets. iGaming, like online casinos.
Makes sense, right? They already have the relationships with the sports betting operators. Leverage those to get into iGaming.
Cross-selling, essentially.
Exactly. They ran a test in Brazil, apparently successfully, offering a whole integrated package, customer acquisition, retention, cross-promotion between sports and iGaming.
And globally, they have quite a few iGaming brands using their marketing services already.
Yeah, 84 brands mentioned.
Yeah.
And they see a big potential market there, a $2 billion global digital iGaming marketing TAM. So definitely an area they're targeting.
Another big piece of news was the IMG Arena deal, acquiring their sports rights portfolio. What's the takeaway there?
It's a significant strategic move. Bolsters their premium content, especially in basketball, soccer, tennis. And the deal structure itself is pretty interesting. They're actually receiving $125 million in cash payments, plus Endeavor is prepaying up to $100 million to the rights holders.
That sounds favorable.
Very favorable. It's expected to close late 2025 and be immediately accretive, meaning it boosts profits and cash margins right away. And they stressed it'll be seamlessly integrated.
They also talked about buying back their own shares.
Completed a secondary offering and repurchased $65 million worth, bringing the total under their current program to $86 million out of a $200 million authorization.
Why do that?
Couple reasons, usually. Increased trading liquidity. Maybe boost the share price by reducing the number of shares out there, especially if they think the stock's undervalued.
Yeah.
Signals confidence, generally.
Got it. Okay, let's switch to the CFO's insights. What were the key financial nuggets?
Well, a really strong customer net retention rate, 122%, means clients are staying and spending more. That's excellent.
Always a good sign.
Yeah. Strong demand across the board, both established products like live data and odds, and newer stuff like managed trading and marketing services.
Revenue breakdowns looked healthy.
Yep. Betting and gaming content up 13%. Sports content and tech services up a whopping 33%, driven heavily by that 36% growth in marketing and media services.
Costs. Anything notable there?
Sports rights costs were up 14%, but they expect margins to improve now that the big NBA and ATP deals are lapped, meaning they're past the initial high-cost period. Personnel costs also up about 16%, but falling as a percentage of revenue, which is good. Purchase services up 24%, mostly due to that marketing services expansion and IT costs.
And cash flow. Liquidity.
Strong free cash flow in Q1, 32 million euros, a 54% conversion rate. And they're sitting on a healthy pile of cash, 358 million euros, with no debt. Very strong balance sheet.
And the long-term targets. Still ambitious.
Very. Targeting operating margins of 27% by 2027, over 30% longer term, and free cash flow conversion hitting 60%. So yeah, ambitious, but clear goals for efficiency and cash generation.
They also gave a hint about Q2.
Yeah, expected EBITDA margins in the high teens for Q2, then accelerating in the second half, with Q3 being the strongest. Free cash flow also expected to ramp up in H2 after maybe being a bit lower in Q2 compared to Q1. Gives a bit of near-term shape.
Okay, technology-wise, computer vision came up. How important is that becoming?
Pretty crucial, it seems. They're using it now to capture data for about half the events they cover. The goal is to get to around 90% automation. Eventually, some sports might just not be suitable.
And what does that automation enable?
It means they can get thousands more data points per sport. That data fuels everything, the player and micro markets we talked about. Better visualizations for fans and more accurate odds through things like alpha odds. It's a data depth advantage.
Makes sense. And the big trend in play betting, that was a focus.
Huge focus. They see it as a clear global trend. Pointed to the UK where it's like 70% of betting already.
But the US is lagging a bit.
It is, yeah. Still adapting. Some sports books are moving faster than others. They don't think technology is the barrier, though. It's more about market adaptation, educating players, and the bookmakers really pushing it.
So they expect the US to eventually catch up.
They do. They think it'll align with international markets, maybe 70–80% in play eventually. And their products, like Foresight and Embed, are designed to help that transition.
Does it work better for some sports than others?
Seems like it. Faster-moving sports like basketball and hockey apparently show higher adoption rates. Baseball works well, too, they said. Even seeing football adoption pick up, according to clients.
Is live betting as profitable as pre-match?
Generally a bit lower, mainly because pre-match often involves parlays which have higher margins.
Yeah.
But they believe their tech and new products are helping close that gap.
Okay, and NBA performance specifically? You mentioned it earlier.
Yeah, performing really well, apparently exceeding projections, driven by those 1,800 new markets, the new Foresight product, and that bet and watch integration with partners like FanDuel and DraftKings. They plan to expand those partnerships too.
Shows the league partnerships paying off.
Absolutely. And the product innovation layered on top.
What about the marketing services growth? 36% is huge. What's behind that?
Mostly just more sportsbook operators spending more on marketing because they're seeing good returns, better customer acquisition costs, or CPAs.
And it's not just a US thing.
No, they said it was broad-based. Plus, they consolidated some new affiliate capabilities, which boosted the number. But even organic growth was still well over 20%. They're also working on this Fan ID product to try and bring acquisition costs down further by engaging fans directly.
Right. And just quickly on M&A and margins overall.
M&A has to be accretive, basically. Any deal, even in iGaming, needs to add to their high growth rates. For future margin expansion, it's mainly about continued revenue growth, on top of what they see as a manageable cost-based long-term rights deals, controlled overheads.
They have some pretty ambitious incremental margin targets, too.
Yeah, aiming for 40% incremental margins through 2027, then stepping up to 50% and beyond.
And capital allocation priorities.
Simple. Reinvest in the business first, new products, services. Then look for accretive M&A, and then return capital to shareholders via buybacks, both opportunistically, like the recent one, and programmatically.
Last point, MLB live betting. They expect that to take off, too.
They do. Similar to NHL and NBA, driven by the deep data they can provide and the visualization tools. And importantly, their revenue share model means they aren't overly dependent on who wins or loses any given game.
Okay. That covers a lot of ground. Ready for the speculative part.
Let's do it. But remember, folks.
This is not financial advice.
Okay, here's a thought. Sportradar is building the engine for U.S. sports betting, right? And in-play is the next big wave. So instead of betting on the obvious sports books, think about who else could massively benefit from integrating Sportradar's tech deeply. Maybe a major sports media company, or even a general tech platform with a huge user base. Imagine one of them announces a deal to embed Sportradar's live odds, micro betting, maybe even the Foresight streaming, directly into their app or website, making it seamless for millions of existing users.
So not a sports book, but someone leveraging Sportradar into their existing audience.
Exactly. That kind of announcement could seriously re-rate that partner company's stock overnight. It's about finding that unexpected integration point.
Highly speculative, hinges on a specific deal.
Extremely. Purely hypothetical. And to maybe hedge this wild idea, you can take a small short position on a big established sports book that seems slow on the uptake with the really advanced in-play features Sportradar offers, playing the adoption curve, basically.
A very creative, very hypothetical scenario. Definitely not advice.
Absolutely not advice, just thinking out loud about the ripples.
All right, that was our deep dive into this latest earnings call. We've unpacked the results, the growth drivers, the strategy.
Yeah, I mean, the themes are pretty clear. Consistent growth, improving profitability, smart strategic moves like IMG Arena, and that huge U.S. opportunity, especially with in-play.
Definitely a company positioned in a very dynamic space.
For sure. The U.S. expansion and how quickly in-play betting takes hold there are definitely the key things to watch.
So what stood out most to you in all that? What questions pop into your head? As always, we encourage you to do your own exploration.
Here's something to chew on. If they really do get close to that 90% automation target for data capture using computer vision, what kind of completely new data-driven products or betting markets could that unlock? Things we maybe haven't even thought of yet, powered by that deeper level of data.
Interesting food for thought. Join us next time on Talk Tickers for another sharp, insightful look behind the numbers.